Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session. In today's session, we are going to discuss a very important news article, okay? And this is regarding the press release that the RBI has recently released. So, the RBI has released the Monetary Policy Committee statement for the June 2025, and with this the governor's statement has also been released, in which major decisions have been notified from the Monetary Policy Committee. So the repo rate has been decreased, the CRR has been decreased. Why they have been decreased, what is the inflation outlook, and what is the real GDP outlook, all of this we are going to discuss in today's session. And there are very important data points in this session that you can use in your descriptive answer writing, as well as these data points are important from your objective point of view of the examination. So do tell me if I am clearly audible and visible. Give me a thumbs up if everything is fine. And this session is going to be very important from the examination point of view, for the objective part of the examination and for the descriptive part of the examination. Okay, so let's start with today's session. Let's discuss the Monetary Policy Committee statement for the June 2025. Okay. So before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay. So good morning everyone, all clear? Nice. So starting with the Monetary Policy Committee statement for the June 2025. Okay, so the Monetary Policy Committee held its 55th meeting from the 4th June to 6th June 2025 under the chairmanship of Shri Sanjay Malhotra, Governor of the Reserve Bank of India. The Monetary Policy Committee members, there are 6 members in the Monetary Policy Committee. 3 members are from the Reserve Bank of India, that includes the chairman or the governor of the Reserve Bank of India. So the governor of the Reserve Bank of India is the chairman of the Monetary Policy Committee. Okay, the other 3 members, they are nominated by the Government of India. So now the 6 members of the Monetary Policy Committee, they attended. So these were the 6 members that attended the meeting. And this meeting was held in June 2025. After assessing the current and evolving macroeconomic situation, the situation of the country, the Monetary Policy Committee voted to reduce the repo rate by 50 basis points, that is by 0.05%. So the repo rate has been decreased from 6% to 5.50%. Okay, so the repo rate has been decreased from 6% to 5.50% with immediate effect. Now with the decrease in repo rate, as you know that repo rate is a part of the liquidity adjustment facility corridor. So if the repo rate has been decreased from 6% to 5.50%, so the SDF has been decreased from 5.75% to 5.25%. Okay, so before the repo rate was 6%, so SDF was 5.75%. Now the repo rate is 5.50%, so the SDF is less than the repo rate by 0.25%. MSF is greater than the repo rate. MSF is greater than the repo rate by 0.25%. So MSF is now 5.75%, which was earlier 6.25%. So all the rates, you can see all the rates have been decreased by 50 basis points, that is by 0.50%. Okay, so if the repo rate decreases by 50 basis point, that is 0.50%, so all the other rates, that is the SDF rate, MSF rate, also decreases by the same proportion, because there is the symmetry between the difference between the SDF, repo rate and MSF. And SDF is always lower than the repo rate by 0.25%. MSF is always greater than the repo rate by 0.25%. Okay, so this is the idea. So SDF rate now is 5.25%, repo rate is 5.50%, MSF rate and the bank rate. So bank rate is always equal to the MSF rate, so they are 5.75%. So now this decision is in consonance with the objective of achieving the medium-term target of the CPI inflation. So the Reserve Bank of India has the legal responsibility to maintain the inflation around 4% within the range of plus minus 2%. That is within the range of 2% to 6%. 2% is lower tolerance level, 6% is upper tolerance level. Okay, so the inflation has to be maintained within this range around 4%. So the decision that has been taken by the Monetary Policy Committee to reduce the repo rate by 50 basis points. So this is in line with the inflation target also, the inflation target is not getting affected. It is going to be near 4%. Okay. Now why the repo rate has been decreased? Why the repo rate has been decreased? So repo rate has been decreased so that with the lesser repo rate, the interest rate in the economy will decrease. At the lesser interest rate, there will be more loans that will be taken by the consumers, by the people. So with more loans, there will be more demand that will be created in the economy. With more demand, there will be more production. And with more production, there will be more employment that will be generated. So for the growth of the economy, for the economic growth, for the more and more economic growth, the decision has been taken to decrease the repo rate, because at the lesser repo rate is the rate at which the banks take loan from the Reserve Bank of India, right? And the banks have to provide a collateral in the form of government security to the Reserve Bank of India. So repo rate is the rate at which banks are taking loan from the RBI. So if repo rate is decreasing, the interest rate is also decreased by the banks. So with the lesser interest rate, there is more economic growth that can be achieved. Okay. So this is the idea. Now coming to the next part, that is the growth and inflation outlook that has been provided by the Monetary Policy Committee. Now why this decision has been taken is to achieve the economic growth, but why the focus is on the economic growth, that you will understand when you understand the data points about the growth and inflation. Okay, so that we have to understand. Till now, any confusion, anyone? So the uncertainty around the global economic outlook has receded, has decreased. So there is lesser uncertainty that is arising in the global economic outlook somewhat since the MPC met in April. So since April, there is lesser uncertainty that is present. Okay, because there is temporary tariff postponement that is happening, optimism around the trade negotiations between the different countries, even the US and China. There are trade negotiations that are going on between US and China. So because of the different steps that have been taken, because of the temporary tariff postponement and the optimism around the trade negotiation, because of all these activities, the global economic outlook, the uncertainty around the global economic outlook has decreased. Okay, however, it continues. However, the uncertainty still continues to remain elevated, still continues to remain higher due to the weakened sentiments at around the globe, because the sentiments have weakened, because there can at any time the trade war can start, at any time there can be the problems can start in between the countries. So the sentiments have weakened for investment and for the consumption at the global level. There is lower global growth prospects due to these weakened sentiments. There is lower growth, global growth prospects that is there. Okay. So what has happened, that there is uncertainty that is receded because of temporary trade tariff postponement and the optimism around the trade negotiations. Okay, so there is positive outlook for the trade negotiations, but still there is weakened sentiments and lower growth, global growth prospects that is present. Now accordingly, you can see that the global growth prospects, they have been downgraded by the organizations like the IMF and such. So they have downgraded the growth outlook. Okay, and they have said that in 2025 there will be lesser global growth as compared to 2024. So the global growth and trade projections have been revised downwards by the multilateral agencies like the IMF and World Bank. Okay, because of the weakened sentiments and lower global growth prospects because of the tariff problem that is going on between the countries. Market volatility has eased. Even if you see the domestic equity market, so you can see that slowly and slowly the domestic market is recovering. Okay, so market volatility has reduced in the recent period, with equity markets, with the share market staging a recovery. Dollar index, that is the dollar prices are softening. The dollar is softening. The value of dollar is like, it was very high before in comparison to rupee. So rupee was depreciating against the dollars and dollar was appreciating a lot against the rupees. So now what is happening, that the dollar is softening and the appreciation of dollar is reducing and the depreciation of rupee is reducing now. Okay, crude oil softening also happened, though global gold prices remained high. So gold prices, it has remained high. You can see that gold has crossed 1 lakh and such. So gold prices have remained high at the global level. So this is the idea at the global level. Okay, so at the global level, tariff problem is going on, and there is weakened sentiments, but the negotiations are going on in between the countries, and there is temporary tariff postponement that also happened, but still there are weakened sentiments, and that's why there is lower global growth prospects. Okay, market volatility has eased, and now there is lesser market volatility. Markets have started to recover, the share market and such. Now so this was about the global growth. Now coming to the national or domestic growth. So according to the provisional estimates given by the National Statistical Office under the Ministry of Statistics and Program Implementation, for 2024-25, the real GDP growth was placed at 6.5%. So we achieved 6.5% of growth in 2024-25. While the real GVA, the real gross value addition, recorded a growth of 6.4%. So real GDP growth, the real GDP growth was 6.5%, while the real gross value addition, that sees the production size, so real GVA recorded a growth of 6.4% in 2024-25. Okay, so real GDP growth, it shows the expenditure side, the growth in expenditure, and real GVA growth, it shows the growth in the production side. Okay, so this is the idea. Now going forward, economic activity in India continues to maintain momentum in 2025-26, supported by private consumption and increase in the fixed capital formation. So in our country, because we have a huge population, so our private consumption can boost the economic growth also, because if we have more demand, we will have more production, and with more production there will be more employment and more income that will be generated in the economy. So going forward, the economic activity continues to maintain the momentum in 2025-26, supported by the private consumption, the domestic consumption that we have, and the increase in the fixed capital formation. Okay, fixed capital formation means the asset formation, like the buildings, factories, machinery and such. The sustained rural economic activity, as you have seen in the annual report, that the agriculture growth was good in 2024-25. There was good agriculture growth in the 2024-25. So there is sustained rural economic activity that poses good for the rural demand, and with the higher economic activity in the rural areas, there will be more demand in the rural areas also, because if there is more income, there will be more demand that will be created. Okay, continued expansion in services sector is happening. Services sector is continuously expanding. This is expected to support the revival in the urban demand also. Investment activity is expected to improve because the capacity or the machineries or tools, equipments, they are used in the higher capacity. Okay, so the investment activity is expected to improve because we are using the machinery, tools, equipments in the factories in the higher capacity. So they are being used in the higher capacity. So once they are used in the maximum capacity, there will be requirement of more machines, tools and equipments to produce more. So there will be more investment that will happen. Improving balance sheet of the financial and non-financial institutions. Government's capital expenditure push is also happening. The government is also giving push to the capital expenditure to the formation of capital asset. Okay, trade policy uncertainty. I have told you that even though the tariff, there is postponement of the tariff and there is the trade negotiations that is going on in between the countries, but still there is the trade policy uncertainty that is present, because at any time the trade war can again start, and any time a particular country can take a bad decision and that can affect the whole of the world trade. Okay, so trade policy uncertainty is present. This negatively affects the merchandise exports, the goods exports from our country. While the conclusion of but we have signed the free trade agreements with the United Kingdom, and we are also in the progress with signing the free trade agreement with the other countries. This is supportive of the trade activity. So though there is trade policy uncertainty, but India is taking steps to sign the free trade agreements with different countries. So we are trying to balance out the negative situation. Okay. On the supply side, the agriculture prospects remain bright. So the agriculture is going to, it is expected that the production is further going to increase in agriculture segment because of the normal southwest monsoon forecast and resilient allied activities. Services sector is expected to maintain its momentum in our country. So however, the spillovers that can happen from the other countries, or the spillovers because of the external factors, such as the protracted or the stressed out or the long-term geopolitical tensions that are going on, the global trade problems, weather related uncertainties, they pose the downside risk to growth in our country. Though the internal conditions seem good, but still, because of the spillovers from the stressed out geopolitical tensions, global trade and weather related uncertainties, there might be a negative effect on the growth. And that's why, taking all these factors into account, real GDP growth for 2025-26 is projected at 6.5%. So this is the projection for 2025-26 for the real GDP, 6.5%. That is same as last year. Now coming to the inflation part, so CPI headline inflation, so that is the retail inflation or the headline inflation, we can say, continued its declining trajectory in March and April, with headline CPI inflation moderating to a nearly 6-year low of 3.2% in April 2025. So you can understand that in April 2025, the inflation, the CPI headline inflation or retail inflation, came down to as low as 3.2%. That is even lower than the target of 4%. So inflation is decreasing a lot. Okay. This was because of the food inflation, because of the moderation in food inflation for the 6th consecutive monthly decline. So food inflation has declined. That is, there is disinflation in food category. So the food inflation has declined by 6 consecutive months. Fuel group. Now, the idea is that always when we studied the previous Monetary Policy Committee statements, we studied that, okay, fuel group is under deflation. That means there is a decrease in prices that is happening in the fuel group. But now what is happening, that the fuel group is coming out of the deflationary condition, and now there is a positive inflation that was recorded in the fuel group. So fuel group witnessed a reversal of deflationary conditions. Okay. So fuel group, it witnessed a reversal of the deflationary conditions and it recorded positive inflation. So deflation means negative inflation. That means prices are decreasing. But now we have now what is happening, that the prices of in the fuel group has started to increase. There is positive inflation that is coming in the fuel group. In the March and April, this is partly reflecting in hike in LPG prices. So LPG prices have increased a little in our country. Core inflation is the CPI inflation excluding food and fuel prices. That is volatile prices. Okay. So core inflation, that is the CPI inflation excluding the volatile prices. So this remained largely steady and contained, like it was at a lesser rate. So core inflation was present, but it was at a lesser rate during the March-April, despite increase in gold prices exerting upward pressure. So even though gold prices were increasing, but still the core inflation was moderated, it was contained. Okay. Next is the outlook for inflation points towards the reduction or benign prices across major constituents. So basically, in the CPI inflation, we take the food and beverages, the clothing, footwear, services. So we take the multiple categories of prices. Okay, and it is said that in major constituents, in most of the constituents, it is expected that the prices will remain there will be inflation. The prices will grow, but by a lesser percentage. Okay, so the prices are going to increase, but by a lesser percentage. So inflation will be there, the prices will be increasing, but by a lesser percentage. So inflation will be lower. The record wheat production and higher production of key pulses in Rabi crop season should ensure adequate supply of key food items. So it is said that the production of the agricultural goods or the crops, the production of crops will be healthy in our country, and that's why we will have the adequate supply of key food items. Next is, going forward, the likely above normal monsoon along with its early onset augurs well. It is good for the Kharif crop prospects. Most projections point towards continued moderation, that continuously there is going to be decrease in the inflation. That is, the inflation rate that was very high before, like it was higher than 6% in around October 2024. So it is going to come down pretty normally for most of the categories. Okay, so most projections point towards continued moderation in the prices of key commodities, including the crude oil, and the inflation that was even higher than 6% in around October 2024, this is going to come down to a very good level. It is going to go down below, even below the target of 4%. So these favorable conditions that we have seen in our country, but RBI is saying, or the Monetary Policy Committee is saying, that we remain watchful of weather related uncertainties, because that can affect the food inflation, and if food inflation increases, the retail inflation, the whole of the headline inflation, CPI inflation, it can also increase. Okay, still evolving tariff related concerns. These problems, the weather related problems and the tariff related concerns, these are the major negative concerns, or these are the major negative problems that can come in the inflation, and that can increase the inflation. But taking all these factors into consideration and assuming a normal monsoon, the CPI inflation for now is expected to be 3.7% in 2025-26. So you can understand that in 2025-26 the inflation is expected even lesser than lesser than 4%. Okay, so the expectation, the inflation expectation is even lesser than 4%. So this is the idea. This is the projection for 2025-26, 3.7%. So inflation. So now the reason to decrease the repo rate is that the inflation has softened significantly over the last 6 months. The inflation has come down. The inflation is positive. The prices are increasing, but the inflation rate has come down in the last 6 months from the above the tolerance band in October 2024. That means the inflation was above 6% in October 2024, and from there the inflation has come down to 3.2% in April 2025, in April 2025, well below the target with signs of broad-based moderation. So broad-based moderation means that in different categories the inflation rate is decreasing. The near-term and medium-term outlook now gives us the confidence of not only a durable alignment of headline inflation, not only the inflation meeting its target of 4%, but even going below the 4%. So it is expected, it is believed that the inflation is going to undershoot the target of the margin, that is, the inflation is going to go even below than the 4%. Okay, so this is the belief right now. While food inflation outlook remains soft, so food inflation outlook is steady, that the food inflation is continue to show steadiness. It is not going to grow very much right now. This is the expectation. Core inflation is expected to remain benign, that is, it is also going to the inflation rate is going to decrease. This is the expectation, with easing of international commodity prices in line with the anticipated global growth slowdown. So global growth is going to slow down. With this, the commodity prices are going to decrease, and it is expected that the food inflation in our country is going to be steady, and the core inflation is expected to remain benign. The inflation outlook for the year is revised. So in April 2025, the Monetary Policy Committee that met in April 2025, so the Monetary Policy Committee forecasted that the inflation for 2025-26 is going to be 4.0%. But now the Monetary Policy Committee that met in June 2025, they said that they projected that for the 2025-26 the inflation rate is going to be 3.7%. So you can understand that the Monetary Policy Committee has revised downwards the inflation outlook from 4% to 3.7% for 2025-26. Growth, on the other hand, remains lower than our aspirations. That means it is said that the growth that is projected at 6.5% for 2025-26, the projection of growth is 6.5%. So it is lower than the expectation of the Monetary Policy Committee because of the challenging global environment and heightened uncertainty. The growth in our country is expected at a lower rate, and that's why the RBI has taken the decision to decrease the repo rate. And the repo rate was first decreased in February 2025 by 25 basis point, that is by 0.25%. Then in April 2025, again when the Monetary Policy Committee met, the repo rate was further decreased by 25 basis point. So from 6.5% in February 2025, the repo rate was decreased to 6.25%. Then in April 2025, the repo rate was decreased from 6.25% to 6%. So the repo rate was decreased by 25 basis points. Okay, in February and April. Now in June 2025, when the Monetary Policy Committee has again met, now the repo rate has been decreased by 50 basis points from 6% to 5.5%. So there is to stimulate the domestic private consumption and investment, to step up the growth momentum, to increase the economic growth in our country. It is said that there is continuous decrease in the repo rate. That is the step that has been taken. So front loading of the rate cuts is happening. That means very fast rate cuts are happening to support the growth. But now the Monetary Policy Committee has also said that these fast rate cuts that we have done, so monetary policy is left with very limited space to support growth now, because already in just the 3 meetings the repo rate has been decreased by 100 basis points, that is by 1%, from 6.5% to 5.5%. okay, so in February 2025, then April 2025, and then June 2025, again and again the repo rate has been decreased. Okay, so after having reduced the policy repo rate by 100 basis points in quick succession in just the 3 meetings, now the monetary policy is left with very limited space to support the growth. That means now there is very limited space to further reduce the repo rate. The MPC also decided to change the stance from accommodative to neutral, because accommodative means that either the Monetary Policy Committee is going to remain the repo rate constant, or it is going to decrease the repo rate. Okay, that is the meaning of accommodative stance. Neutral stance means that the Monetary Policy Committee can keep the repo rate constant, can decrease the repo rate, or can increase the repo rate. Okay, so the Monetary Policy Committee also decided to change the stance from accommodative to neutral. That is, now neutral stance has been taken. That means in the future, seeing the situation of the country, seeing the situation of the macroeconomic factors, seeing the global factors, the Monetary Policy Committee can even decide to increase the repo rate, decrease the repo rate, or keep the repo rate constant. Okay, so the stance has been changed from accommodative to neutral, and future course of action will be taken under the monetary policy to strike the right growth inflation balance. Okay, so Monetary Policy Committee will be carefully assessing the incoming data from domestic and the global factors and evolving outlook to chart out the future course of the monetary policy in order to strike the right growth and inflation balance, so that the inflation do not increase much and the growth do not decrease much in our country. The fast changing global economic situation too necessitates continuous monitoring of the situation. Now some additional information as on May 30, 2025. So in the governor's statement, there are some additional very important facts and very important points that were provided, so that we are going to understand. Any confusion anyone has till now? I hope I am able to explain. Okay. So as on May 30, 2025, India's foreign exchange reserves stood at US $691.5 billion. These are sufficient to fund more than 11 months of goods imports. About 96% of external debt outstanding. So the reserves that we have till May 2025, they are good enough, they are sufficient enough to handle the goods imports for 11 months, and about 96% of external debt outstanding. Okay. Overall, India's external sector remains resilient as key external sector vulnerability indicators continue to improve. Next is the Reserve Bank has decided to decrease the cash reserve ratio. So the cash reserve ratio has been decreased by like 100 basis points. This is the decision that has been taken by the Monetary Policy Committee, and this decrease in the cash reserve ratio will be done in 4 equal tranches. So basically the CRR is going to be decreased by 100 basis points, that is by 1%, and this decrease in the CRR will be done in the 4 equal tranches, that means in 4 equal steps. That means in every tranche, first, second, third, fourth, the CRR will be decreased by 25 basis points, that is by 0.25%. Okay, so CRR, I hope all of you know that what is CRR. CRR, it is the cash reserve ratio. This is the percentage of net demand and time liabilities that the bank has to keep with the Reserve Bank of India in cash. Okay, now net demand and time liabilities, demand liability, time liability. So So this is what? This is the deposits, the demand deposits with the bank, because if you are depositing the money with the bank, this is the liability of the bank to return the money whenever you demand. Okay. So this is the demand deposit. This is the demand liability on the bank. The deposit is the liability on the bank that the bank has to return. Time liability, this is the time deposit. You have done a time deposit for 1 year, for 3 years, for 5 years. So this is a time deposit that you have done for a time period till maturity. Okay, you will keep the money with the bank. So time liability, this is the liability with the bank that the bank has to give the money back on maturity. So now these are the liabilities. So now demand liabilities, time liabilities, these are all the liabilities of the bank. So the total liabilities, demand liability, time liability. Now what is the net demand and time liability? Okay, so in the demand liability, time liability, let's say State Bank of India has got the demand deposits of 50,000 and the so demand deposit, that is the demand liability, is 50,000 and time liability or the time deposit is 60,000. So the demand and time liability is 1,10,000. Now let's say the State Bank of India is depositing 10,000 with the HDFC Bank. Okay, so this money is becoming, now the State Bank of India is transferring 10,000 to HDFC Bank. So this 10,000 rupees is now the liability of the HDFC Bank. Now it is not the liability of the State Bank of India. So we deduct the deposit that a bank do with the other bank, So deposit that the bank do with the other bank. So 10,000 is the deposit that the bank has done with the other bank. So now the net demand and time liability is 1 lakh rupees. Okay. So State Bank of India has the net demand and time liability of 1 lakh rupees. Now let's say the CRR now is 4%. So 4% of 1 lakh is 4,000. So this much the bank has to keep with the Reserve Bank of India in cash. Okay. So CRR currently is 4% of the NDTL. So CRR is 4% of NDTL of the bank. So banks have to keep 4% of their net demand and time liabilities with Reserve Bank of India in cash. Any confusion here? Okay. So now it is said that the CRR will be decreased from 4% to 3% in 4 equal tranches. That is the first, the CRR will be decreased from 4% to 3.75%. Okay, in September 6th, 2025, then in October, November and November 29, the CRR will be decreased in 4 equal tranches. Okay, so this is the idea. So the Reserve Bank remains committed to provide sufficient liquidity to the banking system. So CRR is stated to decrease from 4% to 3% in 4 equal tranches. So first the CRR will be decreased in September 6th, 2025, then in October, then in November 1st, then November 29. On each fortnight starting from these dates, the CRR will be decreased by 25 basis point, that is by 0.25%. Okay, this is the idea. And at last the CRR will be decreased from 4% to 3% by November 29, 2025. The cut in CRR would release primary liquidity of about 2.5 lakh crore to the banking system by December 2025. So the CRR is decreased because let's say before the State Bank of India had to keep 4% of NDTL. Now the State Bank of India will have to keep 3% of the NDTL. That means now the State Bank of India will only have to keep 3,000 rupees with the Reserve Bank of India in cash. That means the State Bank of India now will have to keep 3,000 rather than 4,000. So State Bank of India will have 1,000 with itself more to lend. Okay. So before, if the State Bank of India is keeping 4% of CRR of the NDTL, that means the State Bank of India is giving 4,000 rupees to the Reserve Bank of India in cash. But now 3% of CRR means the State Bank of India has to give 3,000 to the Reserve Bank of India. So State Bank of India is left with 1,000 rupees more that it can lend further. So besides providing durable liquidity, it will reduce the cost of funding to the banks because banks will have more money to lend now as they do not have to give as much CRR as before. This is the idea. Now credit deposit ratio means loan to deposit ratio. So the percentage loan to deposit ratio for the banking system at the end of December 2024 was at 81.84%. Okay, that means 81.84% of the bank's loan were funded through the deposit of the bank. So out of the 100% of loans that the bank is giving, the 81.84% of the bank loans were through the deposits that the bank has gathered. Okay. So credit deposit ratio, this is the percentage of the bank's loans that it funds with its own deposits for the banking system. So credit deposit ratio for the banking system at the end of December 2024 was 81.84%. That was similar to the year ago. Now if you see, the question can come that when the rate was decreased and like when the rate was kept same and such. So you have seen that from the Monetary Policy Committee and its decision on the repo rate, the questions have come, and they can even come from the previous decisions also in regards to repo rate. So remember that the repo rate started increasing from May 2022. So repo rate was increased from 4% to 4.40%. Now till February 2023, the repo rate was increased from 4% to 6.50%. Now the repo rate was kept constant after that. So repo rate was increased first in May 2022 from 4% to 4.40%. Repo rate was increased till February 2023. In 2023, the repo rate was increased from 6.25% to 6.50%. So repo rate was increased to 6.50% in February 2023. After that, it was kept constant till January 2025. From February 2023 to till January 2025, the repo rate was kept constant. Then the repo rate was decreased for the first time in February 2025. After such a long period, the repo rate was decreased from 6.50% to 6.25%. Okay. Then in April, again, the repo rate was decreased by 0.25% in April 2025. The repo rate was further reduced by 0.25%. Okay, and then in June again the repo rate has been decreased. Now it has been decreased by 50 basis points. So this is the idea. Now try to answer this question. Now before going to the questions, this is the Perspective 360-degree series that is taken by Jaskran on Monday, Wednesday and Friday. And I was not feeling well in the past few days. That's why I was not able to take the Friday session. Otherwise, I will be taking one session of Perspective 360. Okay. So on Monday, Wednesday and Friday at 5 p.m. the Perspective 360-degree session happens, in which you can do the answer writing practice, as well as you get the hot topics that are currently in news on which a question can come on in the examination. Okay, so you can do the answer writing practice of the recent topics of the current affairs that can actually come in the examination. Okay, now this is the first question. I hope you will be easily able to answer the question. So this is the first question. No, Zumba, you cannot, but you can like, if you have the confusion, you can mail us at hello@edutap.co.in. okay, or you can call us here. According to me, Zumba, I don't think you can, because you need the degree, but to get more clarity, you can mail us here or you can call us here. Okay, most probably Friday. I had to take the last Friday section, but I felt sick and I was not able to speak. I'm still having problem in speaking because of the throat infection. That's why it is taking me so much effort to speak. Okay, so this is the first question. I hope you will be able to answer this question. And this is the second question. Do try to read the question very carefully and you have to tell me the correct statements. Okay, so do try to answer the correct statement. Okay, thank you very much, and thank you for joining the session. This Friday, I will take the session of Perspective 360, so do join. Okay, thank you everyone. Thank you for joining. See you in the next session, and thank you for joining again.